and welcome to Big Deal. Now, Budget 2023 has many takeaways on the government's vision on several aspects like agriculture, farm credit, green push, healthcare, and more uniformity in taxation across asset classes. Now, all these, when digested by the investor community, really creates the roadmap for future investment decisions. So let me welcome on the show investors who will throw light on how the budget will really impact the investment scenario and the key themes that are picking up post the budget. Let me welcome on the show Anshu Kapoor, the President and Head of Investment Management at Nuvama Asset Management, Amit Chandra, the Chairman and MD India at Bain Capital, and Vineet Rai, the Founder and Chairman of Aavishkaar Group. Gentlemen, always a pleasure to speak to you and welcome to CNBC-TV18. Now, Amit, starting with you, what was the theme and the tenor and the vision of the government that you picked up from the budget? Also, getting into the election year, do you think it was populist and more visionary for a longer term than putting down details for just 1 year?
Thank you, Nisha. First of all, I think this surprised many people because it wasn't an election budget. In fact, the budget had a stimulus for taxpayers of all kinds, from the small taxpayer to the really large taxpayer. And I think that will have a positive impact in months to come. But importantly, that stimulus came with a sense of fiscal responsibility. And I think that's really valuable because everyone in the world is looking at India right now as an investment destination, and being fiscally responsible is important from a macroeconomic perspective. So I think that was a second key objective that in my mind was achieved. The third very important prong in my mind for this budget was the continued investment on CapEx, particularly the green transition and infrastructure, and taking that approach over the desire to keep giving out subsidies and doles, which you can always have done in an election year, and using that as a vision for building the India that we all want to see. So I think those three things to me really stood out and made this actually a very interesting budget in a year in which many people expected something very different.
Right. And a lot of time was also spent by the Finance Minister, Amit, on the green transition, sustainability push and the green push. Now, Vineet, coming to you on this particular aspect, we have had several chats. What does the budget really articulate in terms of future investments going forward and the key highlights and takeaways for you from this?
So, Nisha, I think my friend Amit has just covered the big person's picture. He runs a much larger fund. I run a very small fund. But I also come from the side of those who are really curious about the impact angle as well. From that perspective, this budget is very visionary from on many aspects. If you look at the green push, not only is the more very well articulated and fairly well known push towards green hydrogen, which actually is probably one of the more interesting outlay that the government has provided, with a significant production capacity to be in place. That I think is one big and very positive push towards green and sustainability. But I think the amount of announcements that we see between agriculture, micro, small, and medium enterprises, and the quantum, I think the whole technological base that needs to be created so that more agri-techs can actually service and create efficiencies. The push towards logistics to make it much more efficient, given that the kind of inefficiencies that we see in India, especially when we are going to be competing with the world. And then I think we are actually talking about startups, which the government acknowledges is one of its big success factor. There, I think, while the finance minister made a fairly significant recognition of the sector, I think the idea of extending the losses by 3 years was a very welcome one. But as investors, we are a little underwhelmed with some of the new additions. For example, in the fine print, there is a mention of the angel tax being extended to the international sector. And we would need to understand actually how would it impact the foreign flow of capital, especially for startups. We understand that there is an exemption in case you register with DPIIT with a Form 2 as a startup. But the Form 2 conditions are very onerous for the startups. And those challenges, and therefore not many have registered. We are very, very confident and very hopeful that a large number of startups will be flipping back to India. But the confusion that is being caused right now may actually throw a big spanner in this whole idea of bringing more back into India. And we may see a reverse flip. So I think overall the budget is wonderful. It actually is very visionary.
Yes.
I think Amit mentioned about the fiscal prudence that is very obvious. The 10 lakh crore being put forth. But the more interesting thing is to note that a large amount of that money is coming from, the increase that is coming from, which is roughly 33%, is from the reduction in subsidies, which actually shows the prudence at the level of government. So overall, extremely positive on the budget, slightly underwhelmed as an investor on the new challenges that we see in the 5 years.
All right, and you also mentioned one of the clarifications required, but one of the points that you mentioned will be picked up again, Vineet. It calls for a deeper discussion. But let me first come to Anshu on the message that the market is getting and the impact on the various asset classes. As somebody who manages wealth, which asset classes are now looking more attractive after the budget impact?
Sure, Nisha. Maybe let's add the dimension from an investor's point of view. We've talked about startups and we talked about the macro perspective. See, there are two key messages for the investors in India. And mind you, investors in India, households in India save $700 billion a year. So there's a big pool of savings that will be influenced by the direction of this budget. Number one is the government is encouraging or nudging people to move to the new tax regime. Which means now henceforth, as you move to the new regime, you are not directed or influenced in your investing decisions by tax incentives. Right? That's a big pool of money. And we don't have data actually how much is influenced or not influenced. So there's a big pool of money that goes out of that bracket and therefore becomes available for bank deposits, for mutual funds, equities and other fixed income products maybe. So a lot of influence from investing behavior changing. Right? So the culture, the behavior changing, that is one message. The second message is harmonization of tax rates. So if you are investing in a savings or investment product, it could be under a different vehicle or a wrapper, but it should be treated similarly. I think that's the direction in which we are headed. Just to give you a sense, insurance, savings in insurance is about 50 trillion rupees. It's bigger than the mutual fund industry now. Right? And how much of it is influenced by these tax incentives or aberration in the tax rates, we don't know. But to some extent that has been plugged. But the direction is very clear that you're going towards harmonization. That is one instance.
So tax consideration should not be a factor in your investment destination and also your choice of asset class.
Absolutely.
That is the message coming out, even though the amount is very high of 5 lakh per year in terms of premium, but it's the messaging, and you think that this particular message will get even more pronounced in the future budget.
Absolutely.
That's
the
what
tone and the direction is very, very clear.
A direction has been set, even though it's a very small. See, very few people get covered in this bracket right now, and even if you have done 4+2, only your next 2 is going to be taxable. So that is the breakup at the moment. So the messaging is very clear that tax consideration should not be one of the defining factors for investment. Come back to you for some of the other changes also made. But Amit, let's raise this particular point that Vineet also had alluded to on the rural economy and the push. For an investor community, For an agrarian country like India, how much of a difference does that make, and what are the key takeaways when it comes to the farm credit as well as farmer welfare, credit offtake for farmers, as well as even looking after the food grain and our agriculture, agri-tech infrastructure? How is all this making sense in investment decision for the investors in this space?
Yeah, great question, Nisha. A lot of my work is actually outside of Bain Capital with farmers. And so one of my observations has been that over the past many, many years, a big part of our emphasis has actually been on, policies like MSP, Manrega, and other such approaches to support the agrarian sector and the rural economy. The shift that this government has tried to do over the last few years, and this budget actually lays it down even more, clearly, is to invest in building the infrastructure and the foundations for a more vibrant agrarian sector and hence rural economy. And I think that actually that formalization, in my mind, creates a more resilient sector, a sector which can unleash a lot more opportunities for youth, for investment opportunities for people, in urban areas as well. And let me talk about a few specific opportunities which the budget actually talks about. Everyone in the world has applauded the digital public goods that we created in the last 3 or 4 years, be it the financial goods, be it properties like Coven. And this budget actually talks about replicating that for the farm sector.
Yes.
Now, just imagine what potential that can unleash over the next couple of years once we do that. We know that the farm sector has suffered enormously because farmers are often forced to sell something when they really need to immediately, and lack of storage has costed them heavily in terms of both price and wastage. The budget talks about massively increasing the investment in storage capacity. We know that there is a big opportunity of converting the waste that exists in our rural economy into wealth. The budget talks about a 10,000 crore investment over 3 years from waste to wealth, which we know just that investment alone will create a multiplier in terms of opportunity for farmers. And importantly, that's a green investment, right? And then, 2 other things which I will just highlight, which in my mind could be transformative for the rural economy. The budget talks about setting up of 10,000 BRCs, bio-input resource centers, all over the country, which will facilitate about 10% of our farmers to move to natural farming. Now, natural farming is climate resilient farming. It improves income for farmers. It's great for consumers like all of us because it's pesticide and chemical free produce. It's great for the government because it helps cut fertilizer subsidy, and it's great for the planet. Now, by doing this, we are taking the lead globally in natural farming. And finally, one interesting thing the budget does, there was a lot of talk about making India the global hub for millets,
yes,
right? And I'm sure a lot of people are wondering why, but millets are actually a great super crop, right?
Yes.
It consumes a lot less water. It's great from a nutrition point of view. It's much better for, from a climate perspective. And if we find a way to increase its production so that farmers benefit from an income point of view, it's win, 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 win. So the budget takes a very imaginative, visionary approach towards how to fix agri issues which have existed for decades in a sustainable way, as opposed to simply keep relying on schemes like Manrega. I think I really like that approach.
Yes, very well pointed out, Amit. And I would just make one point that the budget has very well synchronized the green revolution that we are used to when it comes to farming in India and the green revolution that we are seeing around COVID times on sustainability. And it has really brought both these aspects together very beautifully. And some of that will really show results in coming times. But we'll slip into a short breather on Big Deal and lots more to talk about the investment decisions that are going to be defined by some of the budget impacts. Stay tuned for that.